We are back with another video. My name is Corey Phillips. I will be doing a reaction video today for Kathy Wood, who's the Chief Investment Officer for ARK Investments, talking about 2026 and top things to look out for. So not just hearing it from just myself, but hearing it from some of the top investors in the future. She was someone who's early on Tesla, AI technology, and what to look for in 2026. So we're going to get straight to the video. Make sure to like and subscribe. Share this to your friends and family for more information. So we're going to get straight to the video right away.
Acceleration. And what we're trying to communicate is that AI is in early stages still, and that it has miles to go. Sure, it feels like it's a hype cycle because capital spending in the tech and telecom sectors as a percent of GDP is nearly as high now as it was during the tech and telecom bubble. But if you will remember, the tech and telecom bubble laid fiber, and most of it remained dark. Today, the GPUs are driving this cycle. And I'll steal from Brad Gerstner at Altimeter. He's saying those aren't dark. They're in short supply, and they are being used. And we agree completely with that. We compare this capital spending cycle to the railroads in the 1800s. That got up to 5 to 6% of GDP. And then the automobile explosion in the early 1900s, that got up to 3 to 4% of GDP. And then we get to the tech and telecom bubble. That, when you added software and hardware, comm equipment together, that was about the same size as the auto capital spending cycle. And we're about there now in this cycle with AI, robotics, energy storage, multi-omic sequencing, blockchain technology. But we think we're going a lot higher. We think we will go up to, or capital spending as a percent of GDP will rise to 12%. And I'll get into some of the reasons why, but key is productivity. As usual, economics, productivity.
So this is something to look out for as far as being able to understand that artificial intelligence is not just hype. The biggest thing to understand for this is that artificial intelligence is not just hype. This is an infrastructure error. If CapEx spending goes to 12%, that means money flows into chips, power, and data centers, as well as robotics and storage. So people understand that the winners are not just the apps, it's the people that builds the picks and shovels. And this isn't a trend. This is rebuilding the whole entire economy for people to understand that if the demand goes higher, it's based off of how much we're able to increase the spending and return on investment in infrastructure. We need energy. We need data centers. We need all these different rare earth minerals. So artificial intelligence is where they're continuing to expend so much CapEx spending that it's continuing to have capital spending as GDP rise as much as 12%. This is almost 2 times bigger than the railroads, other industries, and it's showing that it is here to stay and it's driving the future of the economy. So this is something to look at and continue to move forward with. So let's move on to the other part of the video.
That as a result of this investment boom and the increased productivity that we see, we believe that real GDP growth will accelerate towards the 7% plus range by 2030.
Yeah, so this is something to show that this is something to show that a lot of people don't understand that this is something that's going to continue to grow each and every year. And it's one of the greatest opportunities for entrepreneurial spirit in history. For people that have been saying AI is a cheat code for execution, If you can't get a job, build a solution. So artificial intelligence will increase productivity, and people that use it will be able to be people that will be successful. You're not going to get replaced by AI. You're going to be replaced by people who use AI to automate and use things more efficiently. Okay, back to this next part of the video.
The ingredients are all there, and it is also a hallmark of technology evolutions that we see a step function change in GDP. The 400 years until 1900, for example, global GDP averaged 0.6%. And then in the late 1800s, early 1900s, of course, we had the railroads, we had telephone, electricity, the internal combustion engine, technology revolution. That 0.6% real GDP growth went to 3% for the last 125 years. And so that was a five-fold step up in GDP growth. We're saying maybe a 2.5 fold step up, but I actually think that's conservative.
So that's something to notice. Like, honestly, just being able to look at, just don't romanticize. 90% of startups fail. You need to have real life solutions to real problems and real demand. AI didn't just delete opportunities, but it rose the standard for what people are expecting in terms of solving real world issues, efficiency, solving climate, solving infrastructure, solving things that can change people's lives. And artificial intelligence will continue to help entrepreneurs scale to a level that's never been seen before, greater than the industrial revolution, to this new technologically automated revolution. Okay, now let's move on to the next part. They're standing at 70% GDP is a massive statement. It would change jobs, wages, business, and creation of everything. But it's something that's to be true. At energy scales, policy doesn't choke it, and productivity actually hits the real economy. That's why I tell people that learning skills and ownership now, because the next decade will build the real builders of this new technology. Even if she's half right, being average is about to get expensive on a lot of different things. This back to this next clip.
By 2030. Thank goodness we had the ChatGPT moment, because that was the aha moment for all of us. As we were saying, wait a minute, look what I can do with this. This is a miracle. And now we see, as we've done the analysis, and you'll find this in Big Ideas, that $20 subscription that each of us pay here at ARK, well, actually, ARK pays for it, but the $20 per seat subscription, and in a few cases, the $200 per month subscription for those heavy users, the $20 we're paying off in about a half day's work. So the payoff time is almost nothing, as we are able to do our research and leverage our time enormously.
Yeah, I think this is something that's super important that people need to understand, is that $20 subscription, we're paying it off in about half a day's work. So this is the part that people miss, is that AI is entertainment, it's leverage. For most people, will pay $20 for Netflix, but won't pay $20 for something that can make them money. And if that AI saves you 2 to 5 hours a week, that's a skill multiplier, not a tool. And AI is a new intern, and people refuse to hire it. So if you're not able to use technology and leverage technology, people that are able to use this will be able to expand and grow at a higher level. So start using these large language models, regardless of the ChatGPT, Claude, Gemini, Perplexity, so that you can be able to make your life more efficiency and also grow and scale as far as your future. Okay, let's move on to this next thing.
This is somewhat controversial, because software stocks have been going through a very difficult time, ironically, through this AI boom. And it is because of the disruption that AI is going to cause to, in particular, SaaS. but all legacy software. We think that software will grow, the market will grow at roughly 19% in our bear case to, I think it's 54% per year in our bull case, up from 14% per year over the last 5 to 10 years. But you have to get on the right side of change. A lot of those software companies are in the private markets, OpenAI, Anthropic, XAI, and in the public markets, the real success story, of course, has been in the platform as a service part of the tech stack. And that, of course, the poster child there is Palantir. So again,
that's something that's super important for people to understand, is that it's telling entrepreneurs that you don't build the same old things with a new logo. If your product is just a dashboard, artificial intelligence will replace it. The winners are the platforms and systems that actually run operations and not just report data. If your business can be replaced by a prompt, it's not a business. You'll get replaced by automation. So in order for you to move in this new era of technology, you have to be able to be the person that's able to build in this, that's regardless of disruption of artificial intelligence, that people need, and services that need to be built on top of artificial intelligence as well. So this is something that's super important. Let me move on to the next part of the video.
The Bitcoin realm, it's been controversial this year because we had the drawdown after the flash crash 10 in August. So stay tuned to, or definitely take a good look at their blogs and their big ideas chart. David, in the Bitcoin realm, it's been controversial this year because we had the drawdown after the flash crash 10/10 in October. We think that a lot of the deleveraging associated with, really, that was a software glitch, I think at Binance, that deleveraging, automated deleveraging, caused $28 billion of carnage. We think we've worked through that now. And I think the main question on Bitcoiners' minds is, okay, are we finished with the traditional 4-year downdraft? Every 4 years, a downdraft in the cycle. We're beginning to think we are, although we could base here in the $80,000 to $90,000 range for a while. But we do believe the next inflection is up. And while I know we got a lot of publicity this year because we talked about stablecoins usurping one of the roles we expected Bitcoin to play. Now, we expected this 10 years ago before stablecoins happened on the scene. But in terms of remittances and emerging market activity, we're seeing stablecoins usurp that role that we thought Bitcoin would provide.
So this is also something that's super important for a lot of people that understand that Bitcoin cycles and stablecoins are taking different roles as far as this new economy. Stablecoins are winning because people want speed and stability. And Bitcoin is still the long-term store value play, but stablecoins are a daily money tool. So most people argue Bitcoin versus stablecoins, but smart people understand they do completely different jobs. Stablecoins are for like everyday products and services, but things like Bitcoin is like a hedge, digital currency and gold of store of value. So Bitcoin is the vault, stablecoins are like the Cash App. So looking at the long-term perspective of different things, regardless of where it runs in its cycles, it's very important to understand where it currently is in your risk to reward ratio of where you're investing in. So let me move on to this next part of the video.
Had a lot more on DeFi and tokenized assets. Stablecoins, just a little bit more on that. I think we passed $300 billion globally in stablecoins. We saw a very large increase in tokenization on public blockchains, up to 19 billion. Now, that's a large increase. I think that was a tripling or maybe even more in the last year. But we ultimately think that's going to 11 trillion, highlighted by public equities, sovereign debt, and bank deposits.
So this is something that's also very important people can understand, is that tokenization means assets move like the internet faster, cheaper, and more global. And that changes investing because access becomes easier, but the real advantage is for people to understand it early. That's why financial literacy matters, because the system is literally upgrading from this old currency of just using things like the US dollar to being able to use the future of wealth as an assets moving like a Wi-Fi speed. So being able to transfer goods and services through different assets like cryptocurrency, blockchain, all those different things is super important to understand the future of finance, the future of wealth. It's no longer about just your community, not just your city, not just your country, but global outlook, and how we can see that how the future is getting faster and more efficient over the course of time, because the old system is kind of outdated, but the new system will be built on something brand new. So let's look into the next part of this clip.
With that, while many people are afraid, given the robotics movement of, and AI, everyone being thrown out of jobs, we disagree. We think this is going to be one of the greatest opportunities for the entrepreneurial spirit in history, especially because you can go to ChatGPT or Grok and say, I think there's a huge unmet need for this, that, or the other product or service. Think about it. And I would like to start that business. Boy, when we started ARK, I would have loved to have a starting point like that. And
there's something that's super important as well. Like looking at this is what I've been saying. AI is a cheat code for execution. If you can't get a job, build a solution. But don't romanticize it. Like 90% of startups fail. You need a real problem, real solution, real demand. AI didn't just delete opportunities, but it created a whole entire new standard. AI is not just from chips, but it gets into automation, robotics, many things like that. So you understand how you can be able to utilize that to make your life more efficiency and create yourself more opportunities. So let me get to this last video.
In the United States, it's about 1%. And so we did a calculation. How many autonomous vehicles would Tesla have to produce, or Waymo, to cover 1% of urban miles? That would be 140,000 units. Now, what would be the number? How many vehicles would it take to cover all urban miles? And that number is only 24 million. That is less than 10% of the installed base of autos in the US today.
This is so powerful because it sounds crazy, but logic is utilization. We use cars only 4 to 5% of our day. Autonomous can run 50 to 60%. So if this happens, it doesn't just change transportation, it changes jobs, insurance, cities, parking, real estate. Autonomy doesn't just change driving, it changes the whole entire economy, the way you think, productivity, and the way that you live your life. Instead of you focusing on being able to get in your car, you're able to get places at an efficient rate of speed and increased time, less time you driving, less time you doing other things, that you can focus more on things that actually you like doing, like business, goals, other things. So this is something that's super, very big coming towards our future. So this is something that I want you to understand, is just that it's something that's super important to use this information, because this technology is here to stay. This technology is something that we have to get ahead of. And looking at what Kathy Wood is saying, one of the top investors, a billionaire, and what she does, one of the top funds, and how we can use this to help educate ourselves, educate our community, so that we can go and build something sustainable, so that we can build something long lasting. This is the biggest opportunity for us to grow, the biggest opportunity for us to build and use this information for more. Let me know if you want any more reaction videos below. Make sure to like and subscribe. And let me know what you think in the comment section. And I'll talk to you all soon. Bye.